We have a major news story to cover. Economic crisis may have been averted. The debt ceiling can has been kicked down the road till 2025. Biden and McCarthy, they reached a handshake deal on the debt ceiling. Both parties are claiming success, while many in both parties are saying they got nothing out of it. McCarthy came out to tell the American people that this was transformational, while Jeffries said it was an incredibly significant step towards protecting Social Security. Here's the bottom line. The government's in gridlock. Republicans control the House, Democrats control the Senate, so they have to compromise. Wall Street thinks this is a good thing because they do not want any one party to rule the day. The president has to sell it to the Democrats, and McCarthy has to sell it to the Republicans to get a place of agreement. There's a ton of reasons why members in both parties would not sign and would not agree. Because largely, in my view, after looking at the agreement, there was really very minor concessions made on all sides. Nobody was getting a lot out of the deal. It kind of was business as usual in Washington. But here's the timeline that we're going to watch. It gets kicked off on Wednesday. The House is going to vote. And then it's going to go, if it passes there, to the Senate. And those guys will have 4 days to get it passed. If they sign it in that 4-day period, it's then going to get rushed over to the president, who's going to sign it into law. If everything went perfectly, that would give us the date of June 5th, which would be next Monday, for a resolution to the debt ceiling crisis. We already know, though, that Janet Yellen has been out sounding the alarms that the U.S. government will absolutely run out of cash early June. And if we were to default, she has said many times that it would cause severe damage to financial institutions as well as the general economy. And on that note, a recent analytics report said that a brief debt ceiling breach would slash 1.5 million jobs. Wow. Raising unemployment from 3.4% to 5%. My first thought on that is, well, that would make the Fed happy. His goal is to get unemployment up to begin to put pressure on inflation, and that would immediately solve that concern. So you really never know what the powers that be may do in this situation. And we also got a report from Goldman Sachs. They predicted that the Treasury will run low on cash by June 8th or 9th, unless the debt ceiling limit was raised. This basically means that the government is just barely screeching across the finish line to get this whole thing resolved. Now, I have to play this clip by Warren Buffett on balancing the U.S. budget because in my view, it is timeless, classic Warren wisdom, and it's spot on. So check this out.
These problems are problems that have built up over decades, and there hasn't been a Congress that's been mature enough or a president that's been mature enough to take this head on.
I could end the deficit in 5 minutes. You just pass a law that says that anytime there's a deficit of more than 3% of GDP, all sitting members of Congress are ineligible for re-election. Yeah. Now you've got the incentives in the right place, right? So it's capable of being done. And they're trying to use the incentive now that we're going to blow your brains out, America, in terms of your debt worthiness over time, and that's being used as a threat. A more effective threat would be just to say, if you guys can't get it done, we'll get some other guys to get it done.
Warren's in top form here. This is one of the more aggressive comments that I've ever heard come out of the mouth of Warren. He basically says they, referring to the politicians, we're going to blow your brains out, America. He defines that as the threat of us losing our debt worthiness and the impact they would have on all of our lives. So I want to break this down. This wise financial sage is comparing excessive government spending as being a fatal or suicidal threat to America's financial institutions as well as our sovereignty. That's something to take very, very seriously. Ultimately, he concludes his statement with, you know what? If you guys can't get it done, we'll just get some other guys to get it done. And I think he's 100% right. If we were willing to let go of some of these career politicians, we could find people that would get in there and actually do this job correctly. I would love for everybody to understand that the excessive print and spend addiction of government is threatening our livelihood. I think Warren gets it, and I don't think it's unavoidable. As of Friday afternoon, the U.S. has less than $60 billion on their balance sheet. That is less money than Microsoft has right now. These guys are sitting on $104 billion. That's right, Microsoft has more cash right now than the U.S. government. Tomorrow's video, I'm going to review two stocks that are rich with cash and who I think Wall Street is most likely to be loading up on in the coming days to take advantage of the coming AI boom. But today, I'm going to briefly talk about C3.ai. Now, this is a popular AI stock whose earnings are coming up this Wednesday, and I think we're going to see a ton of activity tomorrow and on Wednesday. The stock is up 230% in 2023 alone, and I've been saying that AI is a recession killer. And if all of us had been loading up on AI at the beginning of this year, our portfolios would already be halfway to the moon. All right, let's get into C3.ai. The big question is, who are these guys? What exactly do they do? Well, they're a company whose mission is to help businesses as well as governments accelerate AI services, which is basically to get AI to use in whatever a company or a business is doing. They build enterprise scale AI applications. They were founded in 2009, which means they've been around for a little while. They went public in December of 2022. Their IPO stock price was valued at $42 a share, initial public offering of stock. But when the stock opened on the day of sale, it went to $100 and it quickly surged to $140 the following day. And from there, it hit an all-time high of $184 within that same month. Since then, though, and in all of 2021 and in all of 2022, it has been on decline. And if you are a shareholder, I would say that it has been in despair. But in January of 2023, a year that I think is going to go down in history as the beginning of the rise of the machines, C3.ai has been steadily climbing. And like I said at the beginning, it's currently up around 230%. And we're moving towards earnings this Wednesday, which could give it an additional bump. So what do the financials look like for C3.ai? Is this a company that we'd want to be investing in? Well, let's look at them. I would say they do not look good. These guys are tore up from the floor up. The revenue, the income, dilution, earnings per share, profit and operating margin, cash on hand, all categories down. So if you just were to take a really quick glance, you can clearly see that these guys are broke. This is not what would be classically referred to as a value investment. This is totally and completely a growth stock potential. Buying C3.ai is like, in my view, buying a house on the beach that's currently on fire. You got the real estate agent coming by and saying, yeah, there's a couple drawbacks, we'll have to deal with them, but consider the location. And to that, they've got a point. C3.ai has perhaps got prime real estate on Wall Street, while all eyes are on AI. All tech companies in the AI space are going up. So let's disregard the fundamentals for a moment and consider if the price action in the charts shows us something that the fundamentals do not. C3 was officially coming out of being oversold on the RSI in March of 2022. It broke out of the bear zone, which is the point of 50% and below in the RSI, January of 2023. And this has been vacillating in the bull zone ever since. It's yet, though, to push into overbought territory, which causes me to believe that there is an opportunity left in this move to go higher. That's from a technical point of view. When C3 broke above $26.50, that was the trigger price. I always give you guys that trigger price that if you're above, it's bull territory. If you're below, it's bear territory. And ever since then, it's been moving up. Now, if we got a break above $34.99, I think the target becomes $41 to $43. In my view, it's a simple, clear place to place your stop loss at $31, decently beneath the current price, right above that critical area of support around $26. Support is at 28, 25, and 22. Those are your three major supports going down. Take profit are at 40, 50, and 60. Those are your major lines of resistance going up. The bottom line is that on C3, there is irrational room to the upside. That's how I would view it. I'm calling this cash broke company a buy with a stop loss. And I think that we're going to see some serious volatility tomorrow and Wednesday. Keep an eye and put it on your watch list, and let's see what happens together. If you own any, I would love to hear from you in the comment section if you are taking profits now or if you're going to hold it through earnings. Before I give my final thoughts on the debt ceiling, if you need better trade tools, the moomoo investment app is currently offering new accounts up to 20 free stock. This is a limited time offer. There's only a couple days left on that offer. Click on the link to get all of the details, but you know I host a chat group on the app. We call it Stock Josh Fam. You can get your free stock. Each stock received has the potential value of $2,000. Some of you have let me know in the comments that you've gotten a big stock. It's been great to hear. So if you open up an account, you can start your investing. Then you can come find the Stock Josh Family chat group. All right. Let's just touch base on what the debt ceiling is going to do to the markets this week. I think the question is, are we going to skyrocket higher because the risk of the debt ceiling crisis has been put potentially behind us? Or is it buy the debt ceiling rumor, sell the debt ceiling news by the time we get to June 8th or June 9th? As some have speculated that that's what smart money is going to do. Well, like I said in one of my recent videos, the market tends to be a self-fulfilling prophecy of market expectation. The AI push up for the markets may have to go through another earnings cycle to actually confirm all of the hype. And we might just get to the place where we consolidate and move sideways before a bigger move up. I'm not at this moment expecting a major sell-off. At this point, I see us hitting the price targets that I've been giving you guys on recent videos for big tech. I think Apple's going to all-time highs. I think there is a ton of money that's sitting on the sidelines. And here's what's going to happen. When the bears finally realize that the shift has occurred, and I'm going to say that it was that AI swell that was confirmed by NVIDIA, I'm going to call that the shift, then they're going to load up. There is so much cash sitting on the sidelines, people are going to realize that they've missed the bottom, and they're going to begin to buy into the frenzy, causing us to go even higher. This may attribute to a meteoric rise in stocks in the coming days. That moment will be undeniable. And I think it's going to be the day that Apple stock makes that all-time high. I literally think there's going to be such a buzz on CNBC that the worst is behind us. CNBC is going to stop being bearish and they're going to go all bullish. And all the retailers are going to pile up behind them with all the cash that they've had sitting on the sidelines. And that's the strength moment that most of the smart money will likely sell into. And I don't see it happening over the next couple weeks. I see it possibly a little further down. So in conclusion, I think that the SPX, which measures the S&P 500, is far likely going to hit 4,300 before it hits 4,000. There's going to be opportunities, though, to get into these great companies. I think we will get a pullback eventually. I just don't see that here at hand. But you guys know that I'm going to be right here giving you guys the buy signals along the way. And if we get a breakdown, I'll be right there making a video telling you guys that the environment has shifted and things have changed. Those are my thoughts on these markets. I'd love to hear whether you guys think it's going up or going down. As always, thank you for hitting the like. Thank you for being a subscriber. I appreciate myself being part of this community. I hope you guys enjoy the rest of your day. Peace and blessings, my friends. We'll see you in the next video tomorrow.